interested in understanding the basics of blockchain, crypto, or non-fungible tokens, but aren't sure if you have the time to read a whole white paper or watch a 5-hour video? This is for you. This is a simple beginner's guide to these incredibly important and interesting topics. This intro video about blockchain and crypto is designed so that anyone can understand the basic technology and its potential. If you are brand new to the space, enjoy this video as a primer on what's happening. In addition, this is a great opportunity to learn about NFTs and how they work in an easy-to-understand way. So this video will give you a solid introduction to blockchain and crypto, how it works, how you can use it yourself, and what the future might hold. So without any further delay, let's get started with the video. What do you mean by blockchain? If you're unfamiliar with the name, you may have heard of Bitcoin, the first use case for blockchain technology. Bitcoin is a cryptocurrency, a form of electronic cash that allows payments to be sent directly from one party to another without going through a financial institution. Blockchain technology allows Bitcoin and other cryptocurrencies to work without a central authority like a bank or government. Blockchain is the digital, distributed, and decentralized ledger underlying most virtual currencies responsible for logging all transactions without needing a financial intermediary like a bank or credit card company. A blockchain is essentially just a database to which data can only be appended. Think of an Excel spreadsheet or Google Sheet. Once some data has been recorded in any block, it can never be erased or changed. Each new block contains a hash, cryptographic code of the previous block, linking them together in an unbroken chain. A blockchain is also known as a decentralized ledger for all transactions. It works across a peer-to-peer network. With the use of this technology, participants can confirm transactions without confirming them from a central clearing authority. Potential applications can include fund transfers, voting, settling trades, and many other issues. Blockchain is a way of storing and sharing data, in which each new piece of information is connected to the previous one. This creates a chain of data that is difficult to alter, because any change would require altering every piece of information after it. Blockchain can be used to store data about transactions, contracts, property, identities, and more. The technology has been described as an open distributed ledger that can efficiently record transactions between two parties and in a verifiable and permanent way. Blockchain first came to prominence in 2008 with the launch of Bitcoin. It was created by an unknown person or group called Satoshi Nakamoto. Since then, many other types of blockchain have been created for a wide range of uses. Blockchain allows people who don't know each other to trust a shared record of events. It uses sophisticated cryptography, the same type used to secure online banking services and credit card payments, to ensure that all transactions are valid. No one tampers with the data after they are recorded. Understanding about cryptocurrency. A cryptocurrency is a form of digital currency designed to be secure and, in many cases, anonymous. It is a currency associated with the internet that uses cryptography, converting legible information into an almost uncrackable code to track purchases and transfers. Cryptography was born out of the need for secure communication in World War II. It has evolved in the digital era with elements of mathematical theory and computer science to become a way to secure communications, information, and money online. Cryptocurrency is a relatively new type of currency that has become very popular. With cryptocurrency, you can send money to anyone directly from your computer or smartphone, and cryptocurrency can be used to pay for things electronically, like with a credit card. Cryptocurrency is a digital currency that uses encryption to generate money and verify transactions. Cryptocurrency is transferred directly between peers, so there is no need for an intermediary, such as a bank or payment processing service. The most popular cryptocurrency is Bitcoin. Bitcoin's value has risen significantly in the past year, and it's currently the most valuable cryptocurrency by market capitalization. This makes it an attractive investment option for many people. But before you decide whether you want to invest in Bitcoin or other cryptocurrencies, here are some important things you should know. In the simplest terms, cryptocurrency is money that only exists digitally or virtually. It's like an online version of cash. You can use it to buy products and services, but not many shops accept cryptocurrency yet, and some countries have banned it altogether. The physical internet backbone that carries data between different network nodes has become the work of several companies called internet service providers, which include companies that offer long-distance pipelines, sometimes at the international level, local regional pipe, which finally joins in homes and businesses. The physical connection to the internet requires wires, optical fibers, or wireless connections. The difference between traditional money and Bitcoin is that no government or bank controls it. Instead, encrypted peer-to-peer technology manages transactions and creates new Bitcoins. That's also why Bitcoin is known as a cryptocurrency. The security of a cryptocurrency rests in the cryptographic protocol underlying its issuance and management. As we know from previous discussions of cryptography, cryptographic protocols are hard to break. Their security rests on computational intractability, but all cryptocurrencies depend on some form of protocol to prevent people from double spending them. Otherwise, they would be worthless counterfeits. What do you mean by non-fungible tokens? Non-fungible tokens, or NFTs, are a new type of digital item that is unique and cannot be replicated or replaced. Most cryptocurrencies are fungible, which means any particular unit is interchangeable with another unit of the same coin. For example, one Bitcoin is the same as another Bitcoin, $1 is the same as another dollar. But NFTs are different and may represent an asset or hold some value. The internet world is a highly complicated place with lots of layers. If you were to imagine the web as an onion, you'd have a fairly accurate representation. Before we can look at non-fungible tokens, let's look at fungible and non-fungible items. Fungible items are interchangeable and easily replaceable with other similar items. For example, if you want to buy groceries, you may pay for a pound of potatoes. It doesn't matter which potatoes you get, since they're all the same. Non-fungible items are unique and cannot be replaced by another item. They have distinct properties that make them stand out from everything else. Collectors usually enjoy owning non-fungibility because each piece is different and has something special about it. Diamonds or cars are great examples of non-fungible items, as they all have their price tags and value depending on their history, condition, etc. So what do fungible and non-fungible items have to do with non-fungible tokens? NFTs are digital assets, like images or video clips, that can represent either fungible or non-fungible tokens. Non-fungible tokens, or NFTs, are a new way to own virtual items and other digital assets. They are a type of blockchain token that is not interchangeable with other NFTs. The value of each token depends on the individual asset it represents. You may be wondering why this matters. After all, don't we already own content like music and games? Isn't that enough? NFTs open the door for true ownership of assets, even in digital environments. That means you can buy and sell them like any other asset. It also means you can view them as an investment that could potentially appreciate over time. NFTs allow more people to participate in the ownership economy by giving them access to assets they might not otherwise afford. They also offer artists a new way to gain value from their work, or at least some of it. Thanks so much for watching. We hope you enjoyed this video, and we hope to make more in the future. We really appreciate you taking the time to watch us. Bye guys, thanks so much for being part of the Sue Cryptos community. Don't forget to follow us on social media so you don't miss out on any of the action.